Good morning. You're with us here on a fresh new edition of Trading Hours, start of a new week, Monday morning, and the market is doing just fine. I mean, it's been a busy last 76 hours or so, starting Friday evening when that SEBI circular came. Then, of course, there was intense debate about the pros and cons, whether it should have been done, not done. And then finally on Sunday evening, we got another one from SEBI clarifying, well, that there are options which mutual funds have. After all has been said and done, the small cap index is actually up about 4.5% to 5%. That's where bulk of the action is concentrated in. And that's something that we will try and focus here over the next 60 minutes as well. With me, my colleague Surabhi. Hi, Surabhi. Morning.
Hi. Good morning, Prashant. Prashant's joining us from New Delhi, from his home over there. So, Prashant, it's interesting, right? As if all the US tech action and the international market volatility wasn't enough. Now we have this absolutely new phenomenon to deal with, and the last word on this has not been said. There's a lot of back and forth between mutual funds, AMFI, and of course the market regulator. But I guess, Prashant, the speculators are making hay while the sun shines, with the anticipation that a huge amount of money needs to move to small caps and mid caps. I just want to keep the global picture in mind as well as we take it forward with our guest on the show. Right now, just not to forget global cues, Asia has been holding up largely steady. Dow futures, for what it's worth, are still positive. So at least we don't have too much of volatility from the international cue standpoint. The dollar index has been slightly higher. It's not below 93. It's actually above 93, 93.20. So that's something to keep in mind as well. But I think, Prashant, this is going to the SEBI move. It's going to keep the pot stirring for us here over the next couple of days.
Surabhi, the only reason I want to talk about, and I want to begin by talking about some global stuff is because I think over the last 2.5 hours or so today, we've all, focused our energy, and rightly so, on, the SEBI changes and what it may mean and here and now, right? But there is a looming global picture as well, which ultimately may overwhelm everything else we are seeing right now, and that is the US market, the US stock market. I put this out on Wednesday, last week, Wednesday, and I just want to update this because we have seen some interesting price action on Friday, Friday's US market session. Let me tell you what I said on Wednesday. We basically pointed out 4 things which happened before the big sell-off in the month of March. I'm talking about earlier this year, a couple of months back. What happened back then? You essentially had coming into the COVID-induced correction, you basically had a scenario where the price, the S&P 500, remained about the 55-day moving average for a long period of time, right? Actually, for almost a year and a half, the S&P 500 was trading above its 55-day moving average without a break. The price basically became too stretched relative to the 55-day moving average, which means the gap was too wide. And the gap between the 55-day moving average and the 200-day moving average, which the 200-day, of course, would be much lower. The 55 days tracks more recent price action. The gap between the two became too large. And finally, right before the market tanked, the price, the S&P 500, closed below the 55-day moving average, right? And then, of course, we saw that almost 45-50% kind of a fall. This is what happened. And on Wednesday, when I put this out, last Wednesday when I put this out, we were just trying to ask the question whether something similar is going to happen. On Friday, which is the last trading day, something similar has happened. Not completely, but it's, I'm calling it a close shave. So it's very, very close. We're just putting out a couple of figures which on your screen now, the table, which will tell you what happened on Friday. So on the NASDAQ 100, you actually had the price falling below the 55-day moving average. There was a sharp pullback which took it above that average by close. But we did intraday sort of see a sell-off steeply below that level. Then, if you look at the S&P 500 futures, the front month contract, that came within 9 points of the 55-day moving average to pull back and close above it. The S&P 500 spot remains about 20-25 points above its, at the lowest point above its 55-day moving average. So, on the NASDAQ 100, this has already happened on an intraday basis. The S&P 500 futures is very, very close, and we'll have to see what happens on the S&P 500 itself. Typically, what happens is if you get a close below the 55-day, you see a retest of the 200-day moving average, and that's the reason why I wanted to put this right up front to ask the question whether a US market correction is looming. Now, we may debate whether the market here is delinked itself to what happens in the US, etc., etc. But the fact is, in the US, I mean, it's looking more and more dicey day after day, unless, of course, we see one more big ramp up and all these doubts fade away. But right now, it is looking doubtful. Back to you, Surabhi.
Oh, yes, absolutely. So let's watch out and see how some of these cues shape up. And it's a good time to be getting in a market voice as well. Let's discuss all of these things that are shaping our world in the equity market of late. Andrew Holland, Chief Executive Officer at Avendus Capital Alternate Strategies, is joining us on the show. Andrew, good morning. Thank you so much for joining in. Always great to have you on our shows, get some thoughts and perspective. And as I said, the pot is really stirring, right? The Fed is stirring it up. Now SEBI is stirring it up. Let me actually start with the local news because that was more recent, happened over the weekend. How significant is this change going to be? Is it, materially going to alter fund flows when it comes to small caps and mid caps?
I think the jury's still a little bit out there, Surabhi, because, obviously you've seen some of the reactions from the mutual funds themselves. So, I think there's still a long way to go before January of next year. So I would kind of await to see what the mutual fund industry wants to do about this. I mean, on one side, I can understand, why you kind of position yourselves for more funds flowing into mid caps and small caps, but I'd also kind of question, why, some of these funds have not dipped their toes down there. And there's got to be a reason, right? There's got to be a reason either that, the company's, fundamentals are not justifying them buying, or there's governance problems, whatever it could be. There's a reason why they've stuck a little bit more to large cap. So I would have thought, from what I've been reading, and time will tell, that some of these funds will probably move to flexi cap or do something different, because I think you'd be chased by the time, if all of them are going to have to move to mid caps and small caps, then a lot of the price action would have been done, and you'd be buying at very, very lofty valuations, because no liquidity is a problem in quite a lot of these stocks to buy. So I would have thought it's good if you're holding these mutual funds in mid caps and small caps, particularly small caps. But I'm not sure that what we see today will be what the final outcome will be in the end of January.
So, Andrew, you were saying that some of this will fade over the next couple of days? I mean, the kind of moves that we're seeing right now?
I mean, I would have thought so. I mean, you're still, 3 months away from, really what the action would be in terms of what the mutual fund industry response would be to this. So I think I wouldn't, personally, would I be chasing any of these stocks? I don't look at mid and small caps, but if I'm holding it, I'm going to enjoy the ride. I'm not sure I kind of want to jump in and say that this is definitely going to happen. In the way and form which came out originally on the Friday night. To SEBI kind of clarifying what they're trying to do. So I think there will be changes along the way. I'm not saying that you won't see some of these stocks do well if the fundamentals and management and everything else is good for them. But at this point of time, the reason you're not buying mid and small caps is because the economy is still not anywhere near kind of seeing any recovery, which would kind of lend itself to being in the broader market at this point.
Okay. All right, got that view on that subject. Now let's come to the bigger piece, Andrew. That's something that Prashant was referring to as well. Let's look at the whole rally. I mean, you've got this absolutely fantastic near one-way move from March of this year, and then you get the first real wobble in the mother market. Whether it's the Japanese whale causing it or someone else causing it. We're just 4 to 5% away from the peak. What do you anticipate? How does the immediate road ahead, next couple of months, look like to you?
So the next couple of months, obviously we've got some important factors coming along. Let's just take this week. We have the Fed, which is probably the last time before the US elections that, they probably have something they can do if they want to do anything at all. Obviously the targeting towards inflation and average inflation is well known now. And I think that's going to be until the output gap closes, I don't think there's any need to worry about inflation at this point. It's probably more of a 2021, 2022 story. So I think the Fed will keep, kind of very dovish when we heard from them this week, and that will keep markets kind of bubbling along. And then, of course, we do have the elections, and again, the narrative there is that the gap is closing between Trump and Biden. It could be a little bit not messy in terms of the outcome, but it could be very close. And that's what might have a bit more volatility towards the global markets going forward. And whilst Biden is seen as someone who might increase taxes and so forth, that might just play on the minds of markets closer to the time. And we've had a great run, and it's been led by a small handful of stocks where valuations are very rich. So I wouldn't be surprised if you do see some money taken off the table, or at least kind of held to the side ahead of the election. So you might see some corrections. Now, what could change all of that would obviously be, and there's an announcement by Pfizer overnight saying that they would expect Americans to get a vaccine by the end of the year. Now, if that's the case, then two things. One, that's the extra fillip that markets would need, particularly globally. But I would have thought that the consequences of that would be a lot of money flows would go to emerging markets, including India, because then you can see that the global economy would be recovering, into 2021, and that would be good for emerging markets, particularly the exporters as well. And whilst India doesn't fall into that category, I think, given that we're a domestic-driven economy, we will start to see some of those flows come back in, along with all emerging markets. So that's what I would expect to see if a vaccine is announced, and that would be great for emerging markets, to my mind.
By the way, Andrew, the Pfizer CEO basically said that they would know for sure by October whether they have a vaccine which works or not, and if it does work, then they'd get the vaccine to everyone, Americans. I'm guessing first up by the end of the year. But the statement was they would know for sure whether it works or not by the end of October. So that's that. Andrew, let's just talk about financials, because we were getting a lot of calls towards the end of last week saying that starting the coming week, finally we will see some action as far as large cap, even some mid cap financials are concerned, because they've been everybody's been not underweight, but the price has not performed at all, right? Huge underperformance there. Do you think there is any reason that should happen? Sometimes these things just mean revert without very much by way of news flow. But you think that is due?
Well, I think the mid-cap financials obviously will get a nice fillip today, right? Because of the SEBI ruling. So it probably close that gap very quickly over the course of the next few days, I would have thought. So that's the catalyst sometimes that you need for some of these share prices to move. Actually, you have been seeing them edge up over the past 2 to 3 weeks anyway. As some of the I suppose relief factors that the liquidity that the RBI has been pumping into the system has eased a lot of the kind of concerns about the kind of banking sector overall, and we've pushed the kind of problems down the road for another 6 months anyway. So I think that's given a relief to the mid and smaller kind of banks overall. But this extra fillip from the SEBI is going to just accelerate that, I would have thought.
Okay. Before we let you go today, since it's the talk of the morning and the sector of the moment, I'm talking about technology. At least here in India, whatever HCL Tech has had to say today, Andrew, it's got people really excited. Look at their mid-quarter guidance review. They're saying better revenue, even better margins than earlier anticipated. The thing is, all these stocks are at their 52-week highs. Would you be comfortable adding more?
Yeah, I think so, because again, I think there's this change which has happened, right? The work from home, which has probably accelerated itself, many years forward now. And means that the way we do business is going to change again. And I think for a lot of companies, if I think about Europe, for example, where we've been speaking to a number of people, it used to be that people from India would have to kind of travel, meet the teams in Europe and explain what they're doing. I think it's all being done by Zoom now. So there's a lot more kind of comfort levels, with India offshoring as well. And maybe, I'm not saying there wasn't before, but it was, still we need to do checks and balances. I think that's probably gone away, and it's given a lot more comfort to companies, to say we can just offshore a lot more, and we can actually kind of work this a lot easier, by Zoom or whatever they use, to keep in contact with day-to-day activities. So I think there's been a big change in the kind of perception of offshoring as well, which probably wasn't there. To some companies obviously was, but to a lot of companies now that kind of confidence level is going to be a lot higher. And I think Indian IT companies are seeing this, and that's what HCL Tech has actually kind of outlined in their statement, and it's very positive, and it's very positive for the whole sector.
Okay, all right, Andrew, always a pleasure speaking with you. Thank you very much for sparing the time for us today, and we hope to connect again in the coming weeks. We will have to take a break on that note. On the other side, a special discussion lined up on the India-China border standoff with retired Lieutenant General Harcharanjit Singh Panag. Stay tuned for that.